Hey guys, what we're going to go through today is I'm going to introduce you to the changes we've just made to the system. Um, Done with a lot of research. This is the second major update to the system. Um, the first was 1 year ago, and after 1 year, we have a huge amount of data, which I'm just going to share my screen with you, and I can get into the rationale for it and what we're actually doing. So, first of all, if if we look at how this system works, we have four different types of confirming evidence. So we have for example, you can see you can see that the bigger picture, we're in a downtrend on the 5 minute, a downtrend on the 10 minute, and a downtrend on the 2 minute. If we get a reversal here, touch the Bollinger higher close, lower close, look at where the cursor is on the 5 and the 10. It's right here on the 10 and right here on the 5. For this long trade to work, which it has, it needs to be a complete reversal. So it is a true mean reversion setup. If, however, we're looking at, say, this setup here, touch of the Bollinger lower close, higher close, what is the confirming evidence? The confirming evidence is trend with pullback to moving averages on the 5 and trend with pullback to moving averages on the 10. You can see our entry point is here. Our target is about here. Now, this trade looks like a mean reversion setup. If you were just looking at the 2-minute chart in isolation, this might appear to be a two-minute setup, but it is not a mean reversion setup. In reality, this setup is a trade that's a mean reversion setup on the 2-minute, but it's really a trend following setup in the direction of the 5 and in direction of the 10. So we have two different categories of, if you think about all our different types of confirming evidence. So let's look at some of those. So we've got, this is our equity curve. We're back up at all-time highs, which pleases me after a crappy couple of weeks. So we could have Bollinger and Bollinger. We could have trending and walking. We can have Bollinger and trending. We can have decreasing volatility and decreasing volatility, and we can have various permutations of those. Now, let's have a look at what we did. So we tested a number of different exit algos, and the one that's the best combination of high returns and easy to use and low drawdown, you can see the bottom line is we can go for a bigger target on mean reversion trades when they're in the direction of the trend. So Bollinger touch on the 5 and trending on the 10, we can go for a 2R target. Now, you can see here, easily made 2R target. There's a catch with it. Going for big targets can be emotionally crippling if you have a trade that almost gets to 2R, let's say gets to 1.9R and then reverses and becomes a loss. You've got a trade that you were counting on as being a big winner, which now becomes a big loss. That's emotionally crippling. It's just a terrible situation to be in. So the actual rules that we're going to institute, and let's be clear. If confirming evidence is Bollinger Bollinger trending or trending. Then instead of going for a 1.1R target, go for 2R. But you move your stop to break even at 1R. So let's go through that again. So Bollinger Touch, we're still going for very small wins. Like say this long setup here, we're not going for 2R, we're going for 1R. But for example, let's find another one. See this setup here. Bollinger Touch, lower close, higher close. We have a 2-minute short setup. Do we have confirming evidence? We don't actually have confirming evidence. So that's not a setup. Let's see if we can find another one. Actually, why don't I just look at my records? Let's look at trending. So you can see here on this losing trade, touch of the Bollinger, lower close, higher close. We don't always want to show winning trades, that's pathetic. You can see that we're trending down on the 10 and we're trending down on the 5. It's quite reasonable to go for a bigger target. Now, a target down here is totally appropriate. So even though it didn't work, that was still a good trade. Let's look for another one. Okay, here's a better example. The 10-minute is clearly trending down. The 5-minute, we've touched the upper Bollinger. So in effect, this is a trend following setup on the 5-minute, and a bigger target is appropriate. And you can see here, if we had have gone for this for a 2R target instead of a 1R target, it would have made it in easily. And this happens enough of the time, not every time, but enough of the time that it's a very, very good deal to do. So let's look at another one, this time trending. This is a different situation. So that's a hammer, not a mean reversion setup. Let's look at one here. Okay, you can see here we have a touch of the upper Bollinger, lower close, higher close. Short here. Now, look at the 5-minute and the 10-minute. You can see that a big target is easily appropriate and hosting a bigger target. So that's an example of when a bigger target is appropriate. So the first of the changes that we're instituting, if confirming evidence is Bollinger trending or trending for an RTV or RTC setup, then instead of 1.1R target, we go for 2R, but we move the stop to break even at 1. I think that's fairly clear. It's very simple, easy to execute. Now, there's a wrinkle that's going to come up. How do I calculate high and tight? How do I tell if I've got a good risk reward ratio? we calculate it on the basis as though it was a 1.1R target. So for example, in this situation, let me find one. Actually, I've got plenty of them right here. So in this situation, the maximum target is the lowest low in 25 bars, which is here. So the target has to be above here, but not our new 2R target, the old 1.1R target. So you just keep everything. The high and tight requirement is exactly the same. That's exactly the same as it was. Now, the last of the requirements that we have are trend following. So what we mean by trend following setups are hammers and shooting stars. Now, I want to point out something to you. Let's have a look at this hammer setup that was from last week. Okay. What we're trying to do, you can see this setup here, this little hammer candle here, we bought here and it ran away. Now, a hammer candle that pulls back to here is a very different hammer candle than a deeper pullback. If you imagine this like a spring, the more it pulls back, the further it's probably going to bounce up, like it did just here. So the new rule is we still take all hammers and shooting stars that touch the 8 EMA at least. But if those hammers or shooting stars go further and touch or go past the 21 EMA, now we go for 2R target. You can see here, pull back to 21 EMA, go for 2R target. And in the testing that John Garcia, who's our Platinum Group member, did, I think it was 83 or 82% of these trades that touched the 8 EMA made 2R. So we're just leaving a lot of money on the table here. We can easily go for 2R. Let's look at a couple more of these. So this one here is not one of these new hammers. This is a hammer that's just touching the 8 EMA. So in this situation, we'd be foolish to go for 2R. We just got our little 1.1R here. If it was a deeper pullback, like all the way to here, then we would have gone. Let's have a look at some more. So this one and this one here as well just touch the 21 EMA, which is this orange line. Because of that, we go for a bigger target. We would have easily got to our target there. If that was a shallower hammer like this one, we wouldn't have gone for it. Let's look at a couple more just to make it clear. Let's look at okay, so this is another hammer that has not made the 21 EMA. So our target here is 1.1R. So you can see we got long here, just hit the target right here before it reversed. So if this was a deeper pullback, like here, maybe we would have been interested in going for a bigger target, but it wasn't, so we didn't. So hammers and shooting star setups, if hammer or shooting star touches at least 21 EMA or further, then target equals 2R. Now, a couple of things I want to point out here. There's no requirement for high and tight on hammers and shooting stars, so that's irrelevant. The second thing is we're not moving stop to break even, and the reason for that is when you're edging up like this, it's very common for it to back and fill. We're going to be stopped out for break even a lot of the time, so we don't want that. So anyway, so let's recap our three changes. If we've got Bollinger trending confirming evidence, we go for 2R, moving stop to break even at 1R. If it's trending, we move our stop to 2, we move our target to 2R, move our stop to break even at 1R. Trend following changes, if it's a hammer or a shooting star and it touches at least the 21 EMA or further, then our target is 2R. So those are very simple changes. And let's take a look at the benefits of them are massive. Like, this is the old equity curve. This is the new equity curve. We're talking about, let me find some more solid numbers. So this blue line is the original, which is down here, this one. You can see bigger drawdown. And red is 1.5R target, which wasn't as good. Gray is a 2R target, which is pretty good, better than the original, but still has drawdowns. The 2R target with 1R at break even is the clear winner. It's significantly better. So anyway, so these changes that we're instituting are the start of some fairly big changes. And yeah, we're hoping to squeeze another 30, maybe a little bit more % out of the system, which takes it from being great into being amazing. So yeah, I'm really, really glad to have you all on for the ride. And yeah, it's great. So see you soon.